I'd love to hear like the difference between the deals you were investing in the beginning,
Hmm.
when you first got started, compared to what you're investing in now, and the
Yep.
realizations that you've had over the years that have kind of brought you to what you're doing now. Because I think those are the hard learned lessons from experience that
Yeah.
you don't have when you're first starting off.
Yeah. I mean, I would say that some of my fundamental, um, maybe not so much with the properties have changed, because I feel like the types of properties that I enjoy buying and that I like buying that I think perform the best have really stayed the same. But how I fundamentally think about investing has changed a lot. And the reason why is because, as a newer investor, it's just like when you're young, right? You think you can control everything. You think you're smarter than everybody else. You can beat the market, and then the market teaches you otherwise, right? So, what I've learned over the years is to really, you know, work on and focus on what you can actually control, right? And for me, what I can't control what prices are going to do. I can't control what interest rates are going to do. I can't control what the economy is going to do. But what I can control is how long I'm going to hold the property. I can control what type of return on investment I'm going to get, meaning I won't buy a property unless it has a certain return on investment. I can control how much cash flow I get, right? And if I set standards for each one of those things, then no matter what I invest in, I know long term, I'm not going to have to, what we like to call invest in hope, right? I know that
Mm-hmm.
there's going to be a positive return, a positive investment at the end of it. I always, my students and other colleagues are always like, John, aren't you worried about, buying rentals? Like, isn't this the top of the market or isn't this the bottom of the market? Like, first off, none of us know. And second of all, if you just kind of from a mental standpoint, go into owning a rental property that's positively cash flowing and commit to owning it for 15 years. I ask everyone, have you ever known anyone that's owned a house for 15 years and
Mm-hmm.
lost? Right?
Mm-hmm.
No, they haven't, because at the end of the day, we're always going to see an increase in value. It just might take some time.
Yeah.
And so that for me is just the fundamentals, like really honing in on what my fundamentals are and never wavering from them.
Yeah, that's so good. It's funny. I just had a conversation with somebody who was thinking about getting started. They've been thinking about getting started for a while, and I asked them what their goal was, and their goal is to be financially free by the end of next year, the end of
Yeah.
2023, and they thought 6 rental properties would get them there. They were looking at short-term rentals,
Hmm.
and then I checked back with them, and I was like, "So do you want to get started?" And they said, well, I think the market, like you just talked about, I think the market is at a place where we're going to see a dip in the market.
Yeah.
And so I'm just going to wait until that happens. And I said, respectfully, you told me your goal was to get out of this job that you're in by the end of next year. So I said, if you started buying and you bought 6, that's very doable if you started now. And if each one, say, produced, X amount of cash flow, then and the market dips during that time, you still leave your job. You still are financially
Yeah.
free. Say it goes down
Yeah.
20%.
Doesn't matter.
It has no impact on you. 20 years from now, if you kept those properties, you'd still be financially free, still making the same income. And I guarantee you, your principal's almost all paid off, a big chunk of it. The property's worth a whole bunch more, so you got to look at what your goal is. If your goal is purely just to time it, to flip the market and make, accumulate as much equity, that's a tough game to play. But, then
Yep.
maybe you do want to wait. But if your goal is cash flow, I agree with you. It's like stick to the fundamentals and make sure the properties work. Can you share kind of what your metrics are that you look at to determine if a property makes sense for you?
Yeah, for sure. Happy to do that. One more thing, just to add to what you
Yeah.
were saying, and like that student you were having that conversation with. I always try to liken it to perspective is what allows us to, be better human beings and have a broader understanding of things. So I try to provide perspective when I hear that from people. And the perspective that I leave them with is, if you bought a house in 2006, right? And then 2010 came around, and you were really angry that you bought that house in 2006. But in 2022, you're really angry that you didn't buy more houses in 2006, right? Yeah. Because, it's all about, buy and hold, right? And if, you're a Warren Buffett fan, which I'm a Warren Buffett fan, he's like, just commit $300 every month, right? Sometimes you're going to be buying things on sale. Sometimes you're going to be buying things at their highest price. But at the end of the day, it all averages out. And if you stay consistent and do it long enough and just commit to it, you're going to come out on top. Like that's the history of real estate. It's the history of any other financial market. You just have to stay committed. In terms of my personal investments, number one, every investment I go into, I am walking in with the assumption I'm holding the house for 15 years, right? Like that's my commitment. So one thing that I do to start is I'm going to renovate pretty much everything that I purchase, because I know I'm going to want it for 15 years. So I want to reduce my headaches and put myself in the best position. So during that 15-year hold, we're not going to see too many problems or issues. Next is I always shoot for a specific return on investment. Now, I do a lot of BRRRR investing, which I'm sure some of your listeners have heard of: buy, renovate, rent, refinance, and repeat. So I'm doing a lot of value add. And because I'm putting in time, effort, energy, I expect a higher return on investment than if I was buying something turnkey or whatnot. So I usually try to see a 10 cap or above on all of my investments, which is usually 1 to 4 unit type properties. That's my kind of bread and butter that I invest in. So 15-year hold, 10 cap. And then also I'm very stringent on the neighborhoods and zip codes that I invest in. So every city I have kind of a set area that I want to invest in, and I don't invest outside of it, just because if I'm going to hold it for 15 years, I need to know it's in a secure location. So those are kind of like my 3 major specifics that I look at. Yep.
Cool. Can you explain what 10 cap means for people who aren't familiar with that?
Exactly. So CAP is short for capitalization rate, and it is a type of a return on investment. And when we're looking at any type of rental property purchase or real estate purchase, and we're measuring the capitalization rate, capitalization rate assumes that we're buying the property in cash. So let's say this again. It assumes that we're buying the property in cash. Now, normally, I will never buy a house in cash. I'll always finance it. But if I look at a cap rate, one, it's a quick and easy way to come up with a return on investment, and it allows me to compare apples to apples, right? Because I might have different interest rates or down payments or equity and stuff in other properties. But if I just assume I'm buying everything in cash, the comparison of what returns better than the next is the easiest way to review it.
Got it. Yeah. That's great. And so you mentioned when you were, giving a little bit of background that you've been buying in these 5 locations, and that your goal is to really blow up your portfolio over the next 5 years. So what does that look like? I'm curious, because I think I'm doing a lot less volume than you are. I tend to keep 1 to 2 projects going at a time, and just add those to my portfolio as the rehabs are complete. How do you manage that many rehabs in these 5 different markets, and what does that look like in terms of how many units you're targeting?
Yeah. So, when we talk about these different markets, what I've always done is, I've tried my best to be on the leading edge of a market, meaning that I'm getting in at a point where, prices are relatively low, cap rates and cash flows and returns are relatively high. And, if you're good at that, when you're come in at the leading edge, you have an expectation that everybody else is following behind you. And that's going to bump prices up and reduce returns overall. So for example, I don't invest in Dallas, Texas anymore because prices are too high, property taxes are too high, the returns aren't there. It's Memphis 10. Pretty much most of the markets have kind of been tapped out because I've been doing this for 10 years, right? So, a lot of those areas have seen growth that are beyond, allowing me to get the 10 caps that I want. Yep. So for example, I like to stay focused in only 1 to 2 markets at any point in time where I'm like actively buying and doing deals, even though I might be invested in 5 or 6. My main focus will be on just 1 or 2 at a time. So Arkansas is really kind of my biggest focus at this point in time. I really like seeing what they have going on, being invested in a state capital, because that city gets all the money before any other city around the state, right? They get all the jobs before any other major city around the state. And, obviously Walmart's headquarter just north of there, the Walton family's dumping money into that state like you wouldn't believe. So a lot of really good things happening there, and prices are low, rents are high. And then for me, I wouldn't say that I'm doing maybe more volume than you. It's just, I think my renovations and stuff are probably a little less involved than yours are, because you're basically doing a retail renovation to then do a short-term rental, right? Where I'm doing like a long-term rental renovation. So it's probably less extreme, takes a little bit less time. I'm just able to turn over my properties more quickly. But I think I'm at the same clip as you, probably 2 or 3 at once. That's about the max.